Treasury Secretary Janet Yellen says that she thinks there's an increased chance of a soft landing in the economy without the need necessarily to raise rates again. And she kind of did a victory lap with other economists because other economists were basically saying it would be hard to achieve a soft landing without a significant rise in unemployment. So Janet Yellen saying that that doesn't appear to be the case, and it seems that we're on track. I kind of agree with her in that sense. It looks like we're going in that trajectory. Inflation's coming down while economic growth is still good, which is why the stock market did so well in November and into early December. So that's good news. We're starting to see oil continue its decline down, which is good for gas prices. Gas prices are now about $3.25 a gallon. And then a price of a barrel of oil is now below $70, despite 2 million barrels of production cuts a day by OPEC. Oil is still under that $70 a barrel level. That's good for the stock market. Bond yields are continuing to be a little lower. They hit 4.12% yesterday, which is also good for the markets. And investors are really now a little bit anxious about Friday's jobs and unemployment report number. We had a good JOLTS, a job opening number, which is more in line with pre-pandemic levels, but investors are very anxious about the November jobs and unemployment number to see if the labor market is starting to cool off, unfortunately, which is something that the Federal Reserve wants to see in their fight against inflation. So that'll be a big catalyst of where the market goes next. And then next Tuesday, we have the CPI inflation reading, which is also another important number that investors are really watching, because that'll dictate on the following day, on Wednesday, the Federal Reserve's rate decision. Although it's expected that they'll pause with almost 99% certainty, their words and their tone of what they'll say are very important for the markets. And the jobs and unemployment report number and the CPI inflation reading for November will dictate a lot of the tone. I think that it'll be hard for the Federal Reserve not to acknowledge that inflation's going down, but they don't want to really do a complete victory lap yet, because that will ease financial conditions, and stocks and bonds will rally, and crypto probably would rally, and that's not something they want to see, at least that much yet, because that might ease conditions a little too much. But they also want to acknowledge that inflation is starting to really go down closer to that 2% level. So I'll be interested to see what they'll say. And I wanted to end this video by talking a little bit about Bitcoin and crypto. Yesterday, JP Morgan Chase CEO Jamie Dimon was on Capitol Hill, and he said if he were the government, he'd close down Bitcoin because he thinks it's for criminals and money laundering and stuff like that. And that actually can't be further from the truth. Bitcoin is an open source ledger. So when money flows from one wallet to another wallet, you can trace it, and cops and the FBI are doing that now. In Bitcoin's infancy, back in around 2010, 11, 12, before people knew that Bitcoin was an open ledger on the blockchain, yes, there could have been nefarious uses of money flows from wallet to wallet. But now that people know that money transferring from Bitcoin is on an open source ledger, that doesn't really happen as much anymore. In fact, less than 1% of transactions from crypto annually are used for nefarious or criminal purposes. That's a lot lower than it was back in Bitcoin's infancy. The same, unfortunately, cannot be said about the traditional banking system. About 2 to 5% of global GDP is used for nefarious purposes. So there's more nefarious and criminal purposes being used from our traditional banking system than crypto, because with crypto and the open source blockchain, you can find out the wallet owner making those kind of money transfers. A lot of the nefarious activity being used worldwide for criminals and money laundering is actually used in cash, because in cash, you can't trace that once you withdraw it and then someone else deposits it. And then I also wanted to touch on the fact that Jamie Dimon made these comments. It's almost like the horse and buggy salesman saying they want the government to stop cars. It's almost like a Blockbuster executive saying they want the government to stop Netflix. It's almost like the Sears executive saying they want the government to stop Amazon. And you also got to remember that trust what a bank does, not what they say. Behind the scenes, JP Morgan has some projects in crypto. They have their own token, and they have some investments in tokenization, or at least for blockchain technology. So at the very least, they do believe in blockchain technology. And another point I wanted to make, it's not like banks are really innocent and the best actors either. The banks collectively since 2000 were fined a total of $380 billion in terms of fines, lawsuits, and settlements. And the fact that Bitcoin is an open source ledger with no point of failure and can't be manipulated is something very appealing in light of the big banks doing settlements and stuff like that. And I also lastly wanted to touch on why I'm speaking a little bit more about Bitcoin and crypto now. At the beginning of this bull run, I still think Bitcoin's a good opportunity in the long run. I also like Ethereum. A lot of the other altcoins are out there will probably go to zero. Maybe 5 to 10 will survive. But the reason I talk about Bitcoin and crypto more now is that, in my opinion, and as a one journalist, Noel Atchison, says, Bitcoin and more generally crypto is macro now. It's a new asset class, and it reacts very, very much so to macroeconomic conditions. And it's important to cover it in light of what's going on in the economy, especially with BlackRock working with the SEC to fine-tuning their ETF products, and BlackRock also getting $100K in seed funding before the ETF. So I think it's a very strong opportunity, especially right now in the business cycle. Yes, back about a year ago when FTX collapsed, that was the bottom for Bitcoin, but I still think it's a very strong opportunity. And right now, I think crypto is the fastest horse in the race.